Okay, everyone, let's go ahead and get started. My name is Kelly Clement. I'm the Director of Sales here at MetaStock. I'm always pleased to be able to do these webinars with our partners. They're always very educational, and today will be no exception, definitely with Dr. Carr talking about his Trend Trading Toolkit. But before we get too far into everything, I do want to just start with a disclaimer. And we'll just read through this really quickly, and then we'll get into introducing Dr. Carr and then turn the time over to him. So this demonstration is designed to instruct you on using MetaStock and accompanying software plugins and are not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. And basically all we're saying there, and I think we all know this, that there is risk in the market, and we're all assuming our own risk in the market when we are trading. But the tools that we're looking at are used to help us avoid some of that risk, and that's definitely what Dr. Carr is going to be talking about today. So Dr. Carr, also known as Dr. Stoxx, I love the name, is the founder and CEO of Befriend the Trend Trading, and has written a couple of books, Trend Trading for a Living and Micro Trend Trading. And I'm reminded a few years ago when we released this product. I was at a trade show in New York, and we had a gentleman come up, and this was right after we released this product, and said, this is all I use in my trading. This is an amazing product, and it's really helped me dial in my trading and understand the market a lot better. And that's really what Dr. Carr is all about, is helping people understand the markets and helping them develop ways that they can trade effectively. I know he's going to get into a little bit of introducing himself and kind of what he's done. So I'm going to go ahead and turn the time over to him and allow him to go into a little bit more of his biography and show you what he's done. And then I'll come back at the end and show you some things in MetaStock. So Dr. Carr, let's go ahead and turn it over to you.
Okay, Kelly, you'll have to make me, there we go. Let me get my screen going here. Okay. So we're all set. I just wanted to first thank Kelly for giving me the opportunity to speak with you today, and I don't want to belabor the biography any further, but I just wanted to introduce myself a bit more and some of the work that I've done over the years. I am, as Kelly mentioned, the founder of Befriend the Trend Trading, which runs the drstoxx.com website, and this whole story of Dr. Stoxx began back in 1999 when a discussion thread that was online back then for traders called Silicon Investor. I think it's still going, but I have no relationship with it now. But I started a free thread, a discussion thread back then, where I was sharing some of my trading ideas and strategies and trading systems that I was working on, and developed a fair following on that. And from that following, I was able then to launch about 3 years later my first market letter, the Trend Trade Letter. We've been publishing it every market day since then, so it's now in its 14th year. And then in 2007, I was asked by McGraw-Hill to write a book on trading, and I wrote a book on trend trading for a living. I also came out that same year with a second market letter, the ETF Trend Letter. And in 2010, McGraw-Hill asked for a follow-up book, so I wrote one on short-term trading and day trading called Micro Trend Trading for Daily Income. And it was in that same year that I launched my third market letter, the Cheap Stocks Letter, which focuses on stocks under $10 per share. In 2013, we launched the new website, drstoxx.com. And this year, I launched just a few weeks ago my fourth and penultimate letter, I should say, the Momentum Letter. It's kind of a relaunch of a previous letter I was publishing earlier in a beta test sort of way. And in a couple of weeks, I'm going to be launching a new site with a whole new set of services called Ichthus. And I won't get into all the details of that because we're still sort of hammering all that together, but that's going to be coming online in just a couple of weeks. So let's talk then about what we're going to discuss today in this webinar. I'm going to try to keep it nice and simple for you. I'm not going to get into all the technical details of the Trend Trading Toolkit, but I'll show you what you can do with the toolkit. So we're going to talk about the toolkit itself and discuss a bit of the components of it and what all it entails. And whoops, didn't mean that to happen. Secondly, I'm going to talk about how you can use the toolkit to build a best practices watch list for trend trading, how you can build a watch list of the best stocks for trading and use that watch list to find your next best trade. Thirdly, we're going to look at how to use the Trend Trading Toolkit to determine market direction and character. This is something I haven't talked about in any webinar before. It is something that I use the Trend Trading Toolkit for, and I haven't ever taught anybody how to do it. And I finally thought, you know, I'm using it for this purpose. Why not share that insight with others? So I'm going to do that with you today for the first time. And then fourthly, I'm going to show you actually 2 trend trading setups for you to consider for tomorrow's trading. I ran my scans last night and came up with a couple of nice looking stocks, and then I ran them again just a few minutes before we started here and came up with a third stock. So I'm actually going to give you 3 stocks that you can do your further due diligence on before trading tomorrow. So that comes at the end. We'll save that for the end. But let's look at the Trend Trading Toolkit itself. The toolkit is, I think, the largest, if not one of the largest add-ons that MetaStock sells. You're going to get, if you order this product, you're going to get 14 explorations. An exploration is MetaStock's way of describing a scan. So these are all technical scans. They've all been coded into the MetaStock software, and they all follow the trading systems that I've described in my books. I have 3 trading books, all published by McGraw-Hill out now. The Trend Trading for a Living was the first one. Micro Trend Trading was the 2010 book on day trading. And then I published just a couple of years ago, just actually about a year ago, Market Neutral Trading, which discusses a whole new set of trading systems. There are 25 trading systems in all, but I had MetaStock code in just the most profitable and most reliable, most robust trading systems into this Trend Trading Toolkit. So of those 25 systems that I've developed, you're going to get 14 of them. You're also going to get some expert advisories which aren't listed here, and I'll tell you about those in just a moment. Of the 14 explorations, you have 6 long explorations and 7 short explorations, and 1 that you'll use to build your watch list. Now, each trading exploration comes with a full description of the thesis behind the system, so what it is we're looking for when we run that exploration. And you'll also get a place where you can click on the filter itself, and you can dig down into the parameters, the technical parameters that go into building the system, and you can fiddle around with those if that's what you like to do. I would suggest that you don't do that if you don't know what you're doing. But if you do, if you know basic code for this kind of thing, technical analysis, then you should be able to go in and mix it up a little bit. If you want to raise the beta filter, for example, or if you want to lower the volume, average daily volume, whatever fits your trading style best, you can do that for each of these. Now, some of your add-ons in MetaStock do not allow you to do that sort of editing, but every exploration in the Trend Trading Toolkit allows you to dig down into the scan itself and make changes as needed. The explorations themselves are very easy to run. I was speaking with Kelly just a few minutes ago before we started. I was having a little bit of trouble running my explorations because I just updated to the very latest version of the software, and for some reason there's something in my computer that's not compatible with that new version, and I'm told it's a very easy fix, but we didn't have time to fix it just before this. So I can't actually run an exploration for you live here like I would like to, but I did put this together just to show you how easy it is to do. You simply select the exploration in this left-hand column. You would then select the set of securities that you're going to run the scan on, and this is one of the amazing things about MetaStock. You have not only a whole set of U.S. traded securities, but you have securities from every foreign exchange all around the world. Not only stocks, but also exchange traded funds, mutual funds, derivatives of various sorts, E-mini futures, full-length futures, currencies, foreign exchange. It's all here. Even drilling down into different industries. So, for example, if you wanted to run the long pullback exploration on, let's say, the utilities or on technology stocks, you can do that. You just simply highlight technology stocks down here in this lower box. Thirdly, then you would select the time period, and if you've got the full version of MetaStock with the intraday data, the real-time data, you can drill down even to the 1-minute chart. You can go all the way up to the annual chart if you like as well, and everything in between, of course. So, for example, if you want to run the long pullback on a 5-minute chart, because let's say you're day trading the E-mini futures, the S&P 500 E-mini, you would do that, and it would come up with every instance in which the S&P 500 E-mini future is satisfying the requirements of the long pullback setup. And then fourthly, you would simply click the Start Exploration to come up with a list of stocks, ETFs, whatever it is you're trading that satisfy that particular exploration. So that's a brief intro to about half of what you're going to get with the Trend Trading Toolkit. I'll introduce you to the other half in just a moment. But let's talk about one of the explorations that we have listed there. This is an exploration that's not actually looking for trading setups. It is simply culling out from U.S. traded stocks or whatever it is that you're trading. I'll just stick with stocks because that's what I trade. Culling out from those stocks the very best stocks for trading. And when you're doing that, what you want to focus on are the following set of parameters. This is your goal. Your goal is to create a list of 40 to 60 stocks. 40 is kind of my minimum because I want a good variety of stocks to look at. 60 is more or less my maximum because anything more than that just takes too much time to weed through. That have these three things in common. First of all, they have above average daily trading volume. Your average stock on the U.S. averages, the U.S. indexes, trades 93,000 shares per day. And we want stocks that are trading well above that. I usually set a minimum of about 500,000 shares per day. I like my stocks to be fairly liquid, and I'm trading with some degree of size. But you can set that particular parameter to whatever you're most comfortable with. Secondly, you want above average volatility. Now, volatility is calculated in a variety of ways, but the most common way is beta, which measures the degree of volatility of a particular stock over and against the S&P 500. A stock that shows a beta of 1.0 is just as volatile as the S&P 500. A stock with less than 1 is less volatile. A stock with more than 1 is more volatile. And most of the best stocks for trading are 2 to 3 times as volatile as the S&P 500. Now, we don't actually use beta in this Trend Trading Toolkit. MetaStock and I work together to create a volatility scanning parameter that is unique to this particular scan. And in my opinion, it's much more stable. It's a much more reliable means of volatility. Why do you want volatility? Because if you're a trader, your time frame is short-lived. You know, you're looking at maybe a trade of several days to several weeks, maybe several months if you catch a good trend. And you want that stock to move much further and much faster than the average index, which would be your S&P 500. Volatility is a measure of the ability of a stock, or the tendency, I should say, of a stock to move much further and much faster than the base index, in this case the S&P 500. So that's why you want volatility. When you're a long-term investor, volatility can work against you, but if you're a short-term trader, you want stocks to display volatility. Thirdly, I like to find stocks that are priced in what I call the sweet spot. There have been a lot of studies done on risk to reward ratios and which price range best maximizes the risk to reward ratio. So you can have stocks trading under $10. Many people do like to trade stocks that are priced under $10. I, as you know, publish a whole newsletter focusing on stocks under $10. But studies show that the risk of those stocks, but relative to the reward, tends to be not quite as conducive to long-term gains. Whereas stocks over $50 tend to not move as far as fast on a percentage basis, and so while their risk might be lower, the reward is also lower for stocks priced above 50. But stocks priced between 10 and 50 have the maximum benefit for the least amount of risk. So that's why that's called the sweet spot. So once you run your high beta, high volume, sweet spot pre-filter scan in the Trend Trading Toolkit, you're going to come up with your watch list. And then once you've got your watch list of stocks, there are 3 steps you'll take to find the best trades. You can, well, first you're going to run this pre-filter high beta exploration in the Trend Trading Toolkit. That will give you your watch list of stocks. Secondly, you're going to create a chart template for those stocks. The way I do this normally is to put on some moving averages, typically the 20, 50, and the 200 simple moving averages. Those are your most commonly used moving averages. And then I like to put on at least 2, if not 3, momentum indicators of some kind. So stochastic, CCI, MACD, Bollinger Bands, RSI, those aren't all momentum indicators. Some of those are oscillators, and some of those are like the Bollinger Bands. You use those to determine mean reversions and so on. But I'll put on a subset of those indicators so I can get some technical reads on the charts. And then I'll just go through chart one after the other, one by one, looking for the technical setups that fit the particular system that I'm trading. That's the difficult way of doing it, the time-consuming way of doing it. The easy way of doing it is to apply an expert advisor to whatever charts that you're most interested in. An expert advisor is like a whole nother set of systems that you can apply to your charts. And let me just show you how that works here in just a moment. And again, I apologize that we're not able to show you in real time the expert advisor because again, I have to fix something in my software. But this is how it works. When you run your, sorry, I guess I'm backing up a little bit here. So this is back to the Explorer itself. You're going to run your pre-filter high beta watch list, and I've got a description of it here. It isolates the best stocks for trading by filtering out only those stocks which are sufficiently liquid, trading above a certain price level, and which are significantly more volatile than the S&P 500. This is a filter, by the way, a scan that I do feature in the Trend Trading for a Living book. If you're familiar with that book, you know the benefits of building a watch list using those 3 parameters I just mentioned. Okay, sorry, we don't have yet the expert advisor to show you. That's coming up in just a little bit. Got a little bit ahead of myself here. I just created this webinar just for you guys. First time I'm doing it, needed to rehearse a little bit. In any case, let's look at this third item on our list of things we're going to look at today. And again, this is something brand new. Haven't talked about this with anybody before. But you know, I've been using the toolkit for this very purpose for several years now, and while I haven't been maximizing this, I haven't done much in the way of analysis of these numbers. Nevertheless, it is a pretty good way of determining general market direction and character. Let me show you what I mean. In the Trend Trading Toolkit, you have several explorations that are paired up. You have a long exploration, and then you have the reverse of that trading system on the short side. So for example, we have the long blue sky breakout, and then it's paired up with the short blue sea breakdown. Now, if you run both of those explorations on, let's say, all optionable stocks, or you could run it on all NASDAQ stocks, or you can run it on all New York Exchange stocks. If you run both of those, you're going to come up with, and every day you'll come up with stocks that pass both of these, but you're going to see that on some days you'll have far more breakouts than breakdowns. Or on other days you'll have far more breakdowns than breakouts. Now the blue sky breakout is as the name implies, is a trading system that looks for stocks making new near-term highs. We're not looking at something like a 52-week high. We're looking at something more like a 2 to 3 month high, with accompanying strong volume and indicator breakout as well. So you've got confirmation of the breakout coming from two separate sources. This is an excellent way of trading breakouts. You cannot trade a price breakout alone. You have to look at volume, you have to look at momentum. And this filter does all that for you automatically. So only the stocks that pass through this filter are stocks that also have volume confirmation and indicator momentum confirmation. So blue sky breakout is a long breakout to the upside. Blue sea breakdown is a short breakdown to the downside. And you're going to find that over time, as you run these two scans on a day-to-day basis, you're going to see those numbers shifting. And what you're witnessing there is a shifting in the momentum of the market. It's a little bit like the advanced decliner, market internal breadth indicator that you'll sometimes see, or the new high, new low breadth indicator that you'll see. People who are doing a lot of market internal analysis will talk about those two ratios. I find this to be a little healthier because you're not only looking at price breakout, which the typical traditional breadth indicators look at, you're also looking at volume and momentum confirmation. So I find the ratio between the breakouts and the breakdowns to be more informative than the traditional breadth indicators. So once you start to see more breakouts than breakdowns when it's been the reverse, you know that a shift in momentum to the upside is coming. And when you start to see more breakdowns than breakouts after you've been seeing a lot of breakouts, you know a shift to the downside is coming. And I'll tell you, this works very well to give you advanced warning of short-term changes in momentum. And that's, of course, tradable information. So you could make some pretty good money just trading that ratio alone. Another thing I like to do is run the paired long breakout and the short relief rally. If you've read my Trend Trading for a Living book, you'll know that these are two complementary systems. The long pullback looks for stocks in a confirmed uptrend making a pullback to support, and the relief rally looks at stocks making in a confirmed downtrend that have rallied into an area of resistance. When you run these two scans, again, you're going to get numbers of stocks that pass the two, and that will give you a ratio. And the ratio between pullbacks and relief rallies will give you a pretty good idea of whether the market's about to bounce after a pullback or whether it's about to fall after a rally. If you start to see more pullbacks than relief rallies, it's time to get long. When you see more relief rallies than pullbacks, it's time to get short. So again, another nice way of determining the short-term, near-term market direction and character using the Trend Trading Toolkit. Okay, so here we go. Let's talk a little bit about the expert advisories. Once you start drilling down into the charts of your watch list, then you're going to have the option using the Trend Trading Toolkit of adding on to any chart that you're looking at an expert advisor. Here you see a list of the expert advisors that come with the Trend Trading Toolkit. And for the most part, these are the same as the explorations, but you're also going to get these two intraday expert advisors here, the afternoon reversal and the bread and butter setup. The bread and butter setup is both a long and a short setup, so it's actually two filters in one. The afternoon reversal is also long and short. So if you consider that these are actually two systems in one, then you can see that you've got here 9, 10, 11 total expert advisors altogether. You would simply click on whatever system you're wanting to trade. If it could be a pullback, it could be bearish divergence, and once you click on that, click OK, then the chart is then going to automatically locate every instance of that trading setup. Whenever you should be buying or selling short on this particular chart, it's going to show you where that takes place. I've got a chart with some of this added on here. We'll look at that in just a moment, but I just wanted to give you a brief introduction to the expert advisor. Each expert advisor comes with a full commentary, and this is a wordier version, a lengthier version of the description of the thesis of the system. It also gives you some guidance, some advice on how best to trade that system. And every time you get a new signal with the expert advisor itself is going to tell you exactly where to buy it, or where to get in, where to establish the position, where to put your stop loss, and where to take profits at the target price. And the stop loss is a dynamic stop, so it's going to change, it's going to shift every time you get a movement in price in your favor. If it moves against you, of course, the stop loss won't change. So you get complete guidance throughout every trade. All you have to do is open up the expert advisor, click on it, right-click on the chart itself. It will tell you exactly where to set your stop, exactly where to take profits. So I love that feature, the expert advisor. The stop losses, by the way, use two different systems. Both of those systems are described at length in my book, Trend Trading for a Living, so I don't want to go over them here, but just to let you know that you do often have two options for your stop losses. One tends to be a little more aggressive, one tends to be a little bit more conservative. So depending on the kind of trader you are, you can use either stop loss, and your target price is usually just the single target price. Okay, now I want to get into two of the explorations and show you what they look like on a chart itself, and then in the course of this I'm going to give you three trading ideas for tomorrow's market. So we're applying the long pullback exploration to a couple of charts here just to show you what that looks like on the chart with the expert advisor attached. The expert advisor is going to give you these green arrows with a little marker saying buy, and if it's all the way up here at the right edge of the chart, of course, then that's a buy signal on today's chart, on today's price. There isn't one on this particular chart because this isn't much of a pullback here. This is just a straight shot up. This is Illumina, which is of course a big biotech, highly favored and rated by all the analysts. It's one of the great trading stocks. This chart over a period of almost a year, this is about a year's worth of data here, gave us 6 pullback buy signals. The pullback setup, I won't give you all the details here, but it registers a new buy signal whenever you have a confirmed uptrend, whenever there is a multi-day bull pullback in price to an area of support, and when there's corresponding dip below oversold conditions in your indicators. We also use analysis of the moving averages themselves to determine the quality of the uptrend. So it doesn't mean that every dip in price triggers a pullback buy signal, because the quality of the moving averages has to be there. When the system determines that the momentum in the uptrend is waning because the moving averages are doing this or that, then it will not give you a signal. So the quality of these buy signals is really quite strong. Here we have six signals altogether. This one right here, probably this is triggered the signal at around $85 per share, and the price dipped all the way down a couple of weeks later to around 75. That would have triggered out your stop loss. So that one would have been a loss. All the others registered gains of one sort or another. All of them except, I think, this one right here in the middle hit its price target before the next buy signal, but you would have been in and gotten out right about here. So that shows you what the long pullbacks looks like on this particular chart. I want to show you a second chart that had a new pullback signal yesterday, and it actually rallied quite hard today. So unfortunately, this is a little bit past its prime. This is EPAM. It's a software company, again, highly rated by all the analysts. It's ranked right up there on the IBD top 50 stocks. And as you can see from this chart, it's in a strong uptrend with some nice pullbacks and periods of consolidation. And the long pullback is a system that seeks to buy embedded within a period of consolidation in the expectation that the uptrend will continue. We can see 1, 2, 3, 4, 5, and then a brand new one, 6 buy signals here. Of the 5 previous ones, they all were winners. This one here, which got in a little bit early as price fell below the 50-day moving average, and it actually looked kind of weak for a while, but it never did trigger the stop loss. So you were still in this trade and were able then to catch that nice big rally move, which would have hit your target price somewhere in there. Using stops and targets, those 5 winning trades would have netted you 74% in this stock, which is, I think, about comparable, maybe a little bit shy of what you would have had buying and holding this stock over the same period. And that does sometimes happen. You get stocks that just run away from you. They hit your price target and then they just keep on running, and that's part of trading. You all know that. But the advantage of the time in trade is weighs in your favor, because while you would have had to wait, several weeks or even a month here for this price consolidation to work out if you're a buy and holder, you could have turned around, put that money that you made from that previous trade into a new position. So that's the advantage of trading with the target price. Now, you can look at this for a new trade tomorrow. It did rally, I don't know, about $1.50, maybe a couple of bucks today from this price point here of 72.68. That's your entry signal. And it may shoot up still another 7-8 points from here. You'll have to decide for yourself. And I just wanted to show you that is a fresh buy signal as of yesterday's close. Let me give you a fresh buy signal as of today's close. This one was just hot off the presses, and this is MPC, ticker symbol MPC, which is Marathon Petroleum, big U.S. gas pumper. Everyone's pretty familiar with it if you've ever filled up your gas tank. And it's been in a fairly volatile uptrend, but an uptrend nonetheless over the past several months. despite the fall in oil, Marathon is doing pretty well, thank you very much. It had a great shot after earnings where it rallied hard, way up to new 52-week highs. It has since pulled back in to fill that gap, and that gave us our pullback. And then after today's trading triggered above yesterday's high price, we got the entry signal. Normally this would read buy with a little green arrow underneath it or above it from the expert advisor, but as I said, I need to find out what's incompatible on my computer with the MetaStock new version, which is an easy fix, I'm told. But anyway, there it is. So that's one you can look at for tomorrow's trading. MPC trading today at a price around 55.74, and just looking at this uptrend with the support line down here, the resistance line up here, you're looking at maybe a 61, 62 target price, which should be doable over the next month or two. And that's not a bad little trade. You can buy some calls on that if you want a little bit more leverage. Now let's look at what is my most profitable system, and certainly the most exciting. This is not a system to trade if you have a weak heart, because this one will cause your heart to palpitate, both with excitement and with trepidation, as you'll see. This is a system that trades volatile stocks when they are their most volatile. What we're looking for here in the mean reversion system, as the name implies, is a stock that has pulled away from a moving average or a mean to a sufficient degree that it is now trading beyond its twofold standard deviation. And all studies show that when stocks trade outside that range, they tend to pull back to the mean. They tend to pull back to the mean in very short order. This is a trading idea that was perfected by a man named John Bollinger, who developed the Bollinger Bands, and my particular exploration uses the Bollinger Bands in the filter, in the exploration. But the idea actually precedes John Bollinger. It comes from a guy named Larry Summers, whose name might be familiar to you. He was president of Harvard for a number of years. He was second in line to be the Fed chair. He's, big time economist. And Summers, when he was a graduate student, I think it was MIT, but maybe it was Harvard, probably Harvard, published a paper on mean reversion. And it was a new idea back then, but he demonstrated that not only stocks, but whole industries tend to revert to the mean more often than not, that it is a tradable, investable pattern that you find regularly in trading markets of all kinds. So it's not just stocks, it's not just stock industries. You find it in currencies, you'll find it in commodities. And the idea basically is that when a stock moves too far away from its average, it tends to move back to its average before it picks up pace again and moves in the same direction. That's what we're trading. We're trading that snapback, that rubber band move back to the mean. Let me show you what this looks like here. And let me just say, first of all, that in the Stoxx Trend Trading Toolkit, you're going to get one exploration. You push the button once, it's going to give you a list of longs and a list of shorts. So it's really two explorations in one. You're going to get stocks that are moving to the downside away from their mean, and we expect them to snap back up. Stocks that are moving to the upside away from their mean, we expect them to fall back down. Now here's right now the most volatile, the highest beta stock of any stock over $10 per share and over, I think it's 200,000 shares per day, maybe more than that. SunPower, solar company, right, just came out with earnings, hot stuff. Solar's been beaten down for several reasons. China problems, tariff problems, and other things. But it seems to be making a comeback, at least as of today. SunPower, the most volatile stock trading on the market today, U.S. stock, above $10 per share, because you're going to get a lot higher volatility when you start looking at penny stocks, right? I've also got on this chart the 20-period moving average. That's the thick red line, and the two thin red lines are the Bollinger Bands, both the lower and the upper Bollinger Bands. The filter that you have in the exploration looks not only for prices extending above and below the Bollinger Bands, but you're also looking for what's called a percentage B move. Percentage B was something that John Bollinger developed that measures the difference between the price outside the Bollinger Band and the Bollinger Band itself. In other words, how far does it move beyond the Bollinger Band? That's what we're looking for. Coupled with how far is it away from the mean, in this case the 20-period moving average, coupled with volume, coupled with support from other measures. So you're going to get a lot of safety built into this exploration. You can't just catch every falling knife. But if you get a falling knife that is tied to a rubber band that is stretching too far, you're very often going to find it moving back to the mean. Let me put onto this chart the signals, long and short, from the exploration itself. You're going to see 7 signals here, 5 longs and 2 shorts. Now, not all of them would have been profitable based on the stops, the dynamic stops that you would be using, but most of them hit the price targets before they got stopped out. I think 5 of them did, and 2 of them got stopped out. I think this one down here, you know, the stop would have risen up. It didn't quite get to where you wanted it to on the target side, and it would have hit your raised stop loss for about break even. And the same might have happened over here. I didn't really run the numbers too closely on this last trade, but or maybe it was a short. Anyway, one of the other trades would have gotten stopped out for a minor loss, nothing major. No, I take it back. This short did hit because one of the targets you're looking at is hitting the lower Bollinger Band, which is, of course, a dynamic thing that changes on a day-to-day basis as well. If you took each one of these trades, you would have had a profit potential of 67.8%. If you're a buy and holder of SunPower, you're underwater right now because you would have bought this chart at around $33 on the left-hand side, and over here, even after today's nice rally, you're just under 28, and that's a loss of $5 per share. So you're a loser on the buy and hold side, you're a winner on the mean reversion side. I'm going to give you a mean reversion setup on a different chart. No, you know, I don't have a mean reversion setup for you here. I'm sorry. I thought I did, but I don't. So we'll just leave it at that. Just 2 quick notes to give you before I turn to answering some questions. And that is, I did want to give everyone who's listening today a half-off coupon. If you want, you can go to drstoxx.com and sign up for one of our letter packages. We bundle them together in packages now, so the more you add in, the cheaper it gets. And if you use the coupon code HALFOFF, HALFOFF, in the discount code box, you'll get half off your first payment. Even if you buy several months at a time, you'll get half off your first payment. And I also wanted to introduce you to Ichthus. Ichthus letter is coming online in a couple of weeks. It'll be URL ichthusletter.com. Ichthus is I-X-T-H-Y-S. This is a sort of full-service financial help platform. You're going to get a monthly letter. You're going to get weekly updates. You're going to get my long-term portfolio. You're going to get my look out, the market's crashing safe harbor portfolio, which is where we're going to go when the market turns bearish. And you're going to get my proprietary market direction indicator, which has triggered warning of every bear market for the last 20 years with a 93% accuracy. We get a new signal, bear market, we're going to move our money into the safe harbor portfolio. You're also going to get my Ichthus plan for helping you get out of debt, increase your income, and invest in the right things. So that's ichthusletter.com. It's not working yet. Don't go there now, but put it on your notes and check it out in a couple of weeks. Okay, let's look at some questions here, if I can get to them. Sorry, you know, you guys have a lot of questions in there that I haven't seen just yet, so let me take them one at a time. Is there a demo version of STTK of the Dr. Stoxx Trend Trading Toolkit? By demo, I'm not sure what you mean exactly, but if you mean, can you take a trial of it? Yes, you can. You can try it out for 30 days at least and see if it fits for you, and if it doesn't, you can call into MetaStock and they'll help you decouple your account from it. 93,000 shares per day as volume. That's simply the average stock trading today. That's what every stock, if you take every stock trading and how many average shares they trade per day, that's the average, 93,000. Now that's pretty low in my opinion. You want something much more than that. We just want above average volume. So above average volume is something over 100,000. I like to go as high as 500,000 on my screen. What is a price breakout? A price breakout is where the price closes above a set of recent highs. It can be a 52-week breakout. That's typically what you'll see advertised or you'll see in the headline numbers. I frankly like to trade 2 to 3 month price breakouts. I like to get that short-term move and try to catch a stock as it's making a more significant move. Very often when you hit new 52-week highs, that tends to bring out people that want to cash in and you know, take some profits. And a stock can hit 52-week highs and everyone gets all excited about that, and then it just sort of languishes for weeks and weeks on end, going nowhere, maybe even pulling back. I like to catch stocks before they hit their 52-week highs, and that's why I use the blue sky breakout. It keys in on a new 2-month highs with volume, with indicator confirmation. Are there chart examples of what these look like? I'm not sure there are examples online. I gave you a few examples in our webinar today. This webinar is being recorded. You will find it on YouTube in a day or two, and I have a bunch of other videos there as well. That you can go to my channel, go to Dr. Stoxx, DrStoxx, the Dr. Stoxx channel on YouTube, and you'll find you'll find all the MetaStock webinars that I've done archived there. You can go through them, lots of charts, and you'll see some of the things we weren't able to do today highlighted there. You can't see my pointer. Oops, I think I might have not had that pointer thing on. I apologize for that. How about sell signals for this system? Well, I don't know which system you're talking about, Vince, but all the systems in the Trend Trading Toolkit are paired up. You have the long and short momentum, long and short mean reversion system. You have the long and short pullback relief rally system. You have long and short blue sky, blue sea breakdown system. You have a bullish divergence exploration. You have a bearish divergence exploration. So it's a very well balanced. I'm a big proponent of market neutral trading, which means in general for most markets, with the exception of really, really strong bull markets, really, really strong bear markets, I like to be market neutral. So if I put on a long, I like to put on a corresponding short. If I'm long a pullback, I want to be short a relief rally. If I'm long a breakout, I want to be short a breakdown. It does tend to reduce your overall gains when the market is, moving in one direction only. But in the kind of market we've had lately, market neutral trading makes all kinds of sense. And there are days when the market goes down and you are making money on both sides. You're making money in your longs, you're making money in your shorts. That's when it's really fun. So I like to have on both longs and shorts at the same time. MPC has earnings tomorrow. Should we not wait? Well, that's okay. I didn't know that, Leon. Thanks for that info. And I do tend to hold over earnings if I see two things going on. If it has had recent earnings estimate revisions that have been moving up, and if you don't know what that means, you can go to zacks.com, type in the ticker symbol, and find out from their rating whether the stock has had recent earning revision. They usually have a little write-up about the stock. I mean, I'm a member of Zacks, so I get their info for free, but you might have to pay a little bit of a subscription price to have access to their full analysis. But if earning revisions have been going up, then that is a strong indication that the stock is going to be beating estimates and raising guidance. That's what you want. And then usually if you dig down into the headlines, you'll find some analysis on the company where you'll have analysts that are expecting stocks to break out to the upside over earnings. And if I see a number of those kinds of write-ups, then I'm likely to hold over earnings. But I tend to have a pretty high risk tolerance. Not everybody does. If you have a low risk tolerance, if you're trading a small account, for example, then you probably want to stay out of MPC for tomorrow. Dr. Carr, would you prefer mean reversion setups in a range bound versus a strong trending overall market? Yes, yes, absolutely great. And that's one of the things that the exploration is looking for. You don't want stocks that are in a strong uptrend or strong downtrend. You know, occasionally you'll catch the very bottom, but that happens pretty rarely. And it is a true, at least a true statement that you'll go broke trying to pick tops and bottoms. But in a range-bound market where the market is far away from its mean, outside of its Bollinger Band, yet trading at support or resistance, you've got very strong probability on your side that you're going to get a good bounce. That's when I like to trade the mean reversion. Sometimes, Gray, that will mean you have to eyeball the chart a bit and draw in your trend lines and draw in your support resistance lines. Nothing wrong with doing that. I do that all the time. And if you don't have good support, then I would stay out of a mean reversion trade on the long side. Have you tried it in forex market? Says man, asks man. I have applied the explorations to the forex pairs, the key ones, you know, the pound dollar and the dollar yen and the dollar euro. I've applied it to those three, and you do get some very good signals. The forex pairs tend to trend for longer periods of time than stocks do. So you'll often get some really nice pullback setups that just keep going and going and going till they hit your target. Those are nice trades. I don't trade forex, however. I just don't. I just never have. I've only done it in a theoretical sort of way. So if someone has any experience out there trading the toolkit on forex, be happy to have you chip in here, but it's not something I've done myself. Where to find the trial for mean reversion offer? Well, Leon, you'll have to. I know that Kelly will hook you guys up with a discount offer of some kind, and once you take advantage of that, then you'll have the download for the whole Trend Trading Toolkit. You're not just going to get the mean reversion. You're going to get the whole toolkit as one big package. It's an amazing value. I mean, as I said before, I think it may be the largest toolkit of all the add-ons. I may be wrong about that, but it's one of the bigger ones in any case. And when you consider you've got 14 explorations and what did we say, 11 expert advisors, plus all the guidance that you could ever want with stops and target prices, it's a great way to structure your trading. Does this work on the Australian market? Yes, it does. It works on every overseas market, anything that can be traded. MetaStock has an amazing inventory of data. For long trends, would you use the 50 SMA as a stop loss? Yes, you can. And Vince, the pullback setup is designed to key off the 50 period moving average, and it will not give you a buy setup if the stock is trading below the 50 period moving average. So in every case, you're going to get into a long pullback above the 50-day moving average. So certainly, you put your stop loss below the 50 and trail it up. The stop losses that are used in the Trend Trading Toolkit, however, in the Expert Advisor, are keyed on the characteristic of the stock itself, the price volatility. More volatile stocks will tend to trade with wider stops, and less volatile stocks with narrower stops. And that can mean that your stop loss is above the 50-day moving average. It could also mean that it's well below the 50-day moving average and too far below for you to be comfortable with, and that would be a sign that you should not take that trade. Move on to something else. How do you trade mean reversion on the long side, Leon? Well, once you get a new signal for the mean reversion, and again, this is my most profitable system, it will also take the largest drawdowns of any system in the toolkit. But that's the nature of trading, as you probably know. When you're taking when you're able to bank large rewards, you're always, in every case, taking the largest risk. And the mean reversion system is just that. Big risk, but even bigger reward. How do you trade it on the long side? Well, you just wait until you get a good long signal, and then I personally would look at the chart. I don't take every mean reversion signal. And there are some days, on a sharp drawdown day and a sharp market sell-off day, you're going to get a lot of long setups, maybe 10, 12, 15. You certainly can't take all of those. Look at each chart, draw in your trend lines, draw in your support lines, and see which one is trading closest to support. That's the one you want to go with. Can you get earnings information at stoxxearning.com? That's right. I use finviz.com for all my fundamental analysis. It's just a great site. Everything's all there on the same page, but there are lots of places where you get earnings info, Yahoo, Finance, etc. Okay, guys, that's it for questions. Hope to see you over on drstoxx.com, and in a couple of weeks, hope to see you at the launch of Ichthus, and we'll see you soon. Bye now.
Okay, everyone, we'd like to thank Dr. Carr for taking his time to come in and talk to us about his Trend Trading Toolkit and his methods of trading. And you can see why his methods of trading are so powerful and so concise, because he does understand the market and really understands how to identify trends in the market. So what I wanted to do is just take a quick moment in MetaStock, since Dr. Carr wasn't able to show you some of the things he wanted to, is actually take a moment, show you how to run that scan, show you how to pull up the chart, put on his Expert Advisor, and how it can guide you through the trade. So let's go ahead and pull up the Explorer here. We're going to do the long blue sky breakout scan. And again, you can hover over it, understand what's happening with the scan, what it's looking for. And we're going to look through the S&P 500. So simply all I need to do is start my exploration. And what it's going to do is go through that list of stocks for me and identify which of those 500 stocks are giving me a long blue sky breakout signal today. So that's going through step by step right now and recording our results. So you can see right now we're rejecting out about 85% of those stocks. So quite a number of those stocks are being weeded out and don't have this breakout going on. So we'll let it just wrap up here and give us our results. And then once we have the results, we can then take those, apply them to a chart, put on the Expert Advisor, which will then guide us through the trade. So very simple process for identifying that. So let's go ahead and click Reports. We'll click on Results. So here is our list of results. So these are all the stocks that are meeting that criteria right now. So what I can do is select any number of these or one at a time, click Open the Chart, and what happens in the background is it opens up the chart of what we're looking for. So let's just open up one or two of these. and we'll close this out. And what we can do now is we can apply the template, which is a Dr. Stoxx Trend Trading Toolkit setups in here. And these are all identified in here under STTK. So we want the blue sky, which is what the scan was that we applied. And this gives us all the indicators he's using as part of the scan. From here, I can now go in, attach the expert advisor. We'll do the blue sky breakout again. And now you can see these buy signals that are generated based off of that signal. And we have today's buy signal, which was generated by the setup. So what you can see here is you can see it walks us through the trade based off of this stock. So we're looking at ALLE.K here. So it gives us a definition again of the blue sky breakout, tells us what's happening right now, and then gives you the suggested entry price, the suggested stop loss, ATR stop loss, percentage target exit, and your ATR target exit. So you're getting targets and you're getting stops to help you manage the trade as you go through. So Dr. Stoxx has done a great job of putting this together and really giving you a full walkthrough of the trade. So the big question again was, how do I get a trial of the Trend Trading Toolkit? Well, basically there's a few ways that you can do it. One, it's a 30-day money-back guarantee. The normal cost of this is $399. We do have it on sale because you're attending the webinar for $299. All you need to do is either give us a call at that 1-800-882-3040 and mention code either Dr. Stoxx or Befriend the Trend, and you'll get that $100 off. You also, if you don't have MetaStock already, can take a free trial of MetaStock. So we offer a 30-day free trial where you can try it out risk-free for 30 days along with the Trend Trading Toolkit. And you can either do that again by giving us a call at the 1-800-882-3040 or visiting metastock.com/befriendthetrend. And that will allow you to take a trial of MetaStock and get up and running today with it and using the toolkit. So again, I'd like to thank everybody for taking the time out of their day to attend the webinar. And certainly if you have any questions about the Trend Trading Toolkit and what it can do for you, give us a call at that 1-800-882-3040. Thank you, everyone.